Good afternoon, everyone. This is Dan Hussey from AlgoDayTrader.com bringing you a market recap for July 19th, 2012. It's currently 3:07 p.m. Central Standard Time, just after the NYSE open, just before the settlement in the S&P 500. So let's start with the S&P today. This whole week we have been nothing but looking for the bull trend, or what is the next bullish move. In other words, where's support in the S&P? We have come off of major lows, and are currently holding inside of a long trend. This trend began when we held a traditional halfway back long into settlement on the 12th of July. We then we held extension longs, 2 targets. We broke a halfway back short, pulled into a full halfway back long, have now blown through targets, and have began new extensions drawn from the highs before the breakdown into the previous halfway back long to new highs. These extensions have held us up for 2 days now. Yesterday they held us at the 63 halves to a 74 target. Same anchor new highs. We traded the 66 half to the tick this morning, filled our gap, and have been wedging inside of this extension all night. We anticipate continued upside to the targets of a 1378, which align with the larger time frame target at 1380. Overnight, we are going to be looking for support at our current extension level. We have a bullish above, bearish below line in the sand at 63 half. Below 63 halves, we could pull into a full halfway back long, and that full halfway back long is all the way down. It is now down at, drawn from your 1975 lows to the 76 highs. And it comes in at a 1347. We're not anticipating that until we break below the 63s, or 63 half. Overnight and into tomorrow, we're going to have a gap fill and a pivot that align at the 71 quarter. If we trade up into the 10-point gap and go level overnight, which is at 81 quarter, we will fill the targets, and the next in the series of measured moves will align just like it did today, with being allowed to fill the gap, trade our 1369 long, and be onward and upward to 1380 targets. Of course, if 1380 targets are filled, we could actually pull into the next traditional on a larger time frame. We'll concern ourselves with that, if we break the extensions, because right now we are in extensions until they fail. Period. And these extensions could very well take us all the way up to like 1400s. We're not getting ahead of ourselves. We only have a 1380 target right now. The Aussie dollar. Not much to speak of, by the way, in the S&Ps in a micro time frame today. Just totally an inside range today. The Aussie dollar overnight. You make this a slightly bigger 15-minute chart for us. We hopped in on the trend at the 102.50s right here, and we had 104 targets, which are a larger time frame target. Let's take a look at that on the daily and why we were looking to 1304's targets. Actually, hourly, I'm sorry. Why am I saying 1304? 104 targets. 104 targets have been hit. And it was in this traditional. Okay, we first held an extension to target. The next pullback after the extension targets were filled was a traditional that has now hit its targets. Whenever you have a traditional after an extension, the highs of the traditional to new highs become a valid pullback. It is like our large, if we're going to get a nicer 100 pip downside move, we're going to be buyers at 103.35. It's a brand new extension, and it's the extension that would very likely take us all the way up to 108 highs, or start the larger trend at 108 highs. Overnight, however, yesterday we held extensions extension longs off of the 101 lows, same anchor, new high. We then blew out of extension targets, and we have a valid pullback if the market decides to also pull back at 103.70s. Currently, the market has flagged inside of all day. Extensions drawn from the 103.74s to highs. Kind of interesting, very interesting level that's traded. We should probably go down to the 15-minute chart so you can start to see this a little clearer. You can run through the extensions that traded to the high up. Traded once an extension, broke out of new highs, and we traded a new extension long that has now traded once to target, twice in a front run, and 3 times we flagged inside this extension all day long. So before we even, to me, there's only 2 levels that I'm concerning myself with. It's the 104s. We want to see us stay above 104s. The invalidation is a 103.95 at this point. And we flagged just like the S&Ps inside this extension long, and the 103 or the 103.35s, which is the much larger brand new extension. So if we fail the 103.96s, we'll look for support at 103.95s. It very likely would trade with the full halfway back on the S&P. We have upside targets now of the 104.65s. So we get to our upside targets. You can continue trading same anchor new highs on this extension drawn from the 103.66 high on Wednesday overnight. The Aussie dollar, very similar to the Aussie yen. I'm sorry, the Aussie yen, very similar to the Aussie dollar. The difference here is that we were an ascending wedge, and we have actually broke out to the upside of this wedge, which there's only 2 things you can do in an ascending wedge. You're either coiling in a move that could potentially break out, and we've just seen 50%, 50%, 50%, 50%, 50%, yada, 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 hold all the way up. These traditional series of measured moves the whole way up. We're either going to break out, or the market can get slammed out of these types of things. In other words, the failure level really is an 81.70. I want to give it an 81.65 stop just to be safe. But I am curious actually to watch the gap up highs, just like the S&P or the Aussie dollar, to new highs. Potentially has supported the 67. So I've got a stop at 81.50. I think we can move that to 81.55. I don't want to see this market below 81.70s, and if it does, it better fill this 67 and then go. But we have upside targets right now at 81.15s, 81.17s. So we'll see what happens overnight. I am going to hold the Aussie yen and just be aggressive with a stop here and see if it does actually get a substantial upside move. Reason being is step back to our hourly chart. We are in this next in the series traditional with 83.40 targets. We're now above this prior high, and we are coming in on prior highs, which reside at the 82.38s, 82.40s. So very, very, very good chance we could continue higher here in the near term, break out of highs, and continue on to the 83.40. So that's why I want to be aggressive with the stop, just to lock in profits, but not so aggressive that if there is a little bit of a downside, we're not going to miss that burst. Hopefully we just go straight up through highs here, but it's not always the case. Still targeting 83.50s. The Eurodollar today was probably the most technical and one of the best days we've seen on the Eurodollar in a long time, at least for longs. All week, every daily candle with the exception of yesterday, we have made higher highs and higher lows. We definitely made higher lows yesterday, but not higher highs. So we are continuing to show multiple different signs of reversals in different schemes. We broke the extension short that traded from the 124.07 anchor to lows. Traded once, and the next time it traded, we broke it today. Immediately after breaking it, the market pulled into a full halfway back long. We participated on this long. The long traded, we got free, and we're working with a 122.20 stop. This is the $2,000 account that we're trading. We're working with a 122.20 stop, looking for the swing up to the next daily short. Let me show you why we're looking for the swing to the daily short. Our last daily short we had has finally hit its downside target. In other words, the short from the 3440s, we have filled now the downside targets at the 102.40s. We have even filled the downside target, or just about filled, the downside targets from the extension short that broke prior. But technically speaking, because it broke, I don't really consider them having a target, so to speak of. Needless to say, the extensions that we actually witnessed trade have now broken, and the market gave us what we call the ambush long. And it's kind of hard to see, and I'll get rid of these trend lines. But the pullback is to the cleaner break here. You know, we did break by a couple pips here. They proved to us that the longs couldn't hold it yet, but this break here, all the shorts that were selling it here, proved to us. We got proof today that they all flipped and bought this market. They held the halfway back long. After this one moment. Okay, sorry, I kicked my kicked my thing and the colors went funny. After we traded that long this morning, the market rallied up. Broke the micro extension shorts and immediately pulled into a halfway back long off of lows in a front run. The market was bid up. It broke all the way halfway back short off of highs, punctured the 61.8, and immediately after puncturing the 68, it pulled straight back down into a full halfway back long. We have had 3 ambush longs that traded today. The first was the full pullback. The next was the break after the micro extensions. That was a front run. And then the to the tick full halfway back long traded after we broke the full halfway back short off of this week's highs to today's lows. We anticipate now the euro trading up into the 123s to fill I guess you could call the 15-minute long. You know, next in the series. And we anticipate the series taking us all the way up to a 123.62 target in the short term. That's just the target technically from the long we are in. There is nothing wrong with taking profits there. The market should give you an opportunity to get back in. It is my experience with the euro, however, that once it will get through these highs, it will begin a short squeeze that it will not let you get back in on, which is why I personally have decided I'm going to hold this first swing up into the daily short. Again, the daily short hit its downside target, which means there is a high probability that this daily short, the entry highs to target lows, the market will trade all the way back up to the 128.30s. Naturally, now in a series of measured move longs, counter trend technically, a counter trend series of measured move longs short squeeze up to the 128.30s. This type of rally, however, though, we have looked at the euro before. The euro's all-time lows at 82 cents to all-time highs at $1.60. We are bouncing off of, once again, the 50% of that level here at the 120s. So personally, I don't anticipate this next in the series short holding. It could, it's there, and we will look to cover, and we'll add and we'll build a long position as we see upside continue. But at the end of the day, we have now held the first long off of lows in the direction of trading to that full daily short. This is why I've been saying we're going to head to 128 now. This is how it starts. We see a short break and longs holding off lows. So the trend is now up until it fails, because there are no shorts in this market until that full daily halfway back short. We've broken them. We've broken the shorts. So is my computer frozen? No, okay. Let's look at pound dollar. Let's look at the pound dollar because we got some people are talking about that right here. Very similar here. Oh, and I want to look at Euro Aussie too. Pound dollar is I want to step back to the daily to show you where we are. In the daily, we're very much just like the euro, coming off of our major range lows. Coming off the major range lows, we've just traded the 48 or the 54.85 level. Okay, and we find ourselves now on the daily time frame between a all the way halfway back short and the full halfway back long that has held now for has held support since 2010. Very much a range-bound market. If if the market can break this short, then we have something to do. There's almost nothing outside of getting down to where we came off of lows here and seeing that we held we started a series of measured moves that actually went into extensions here. Traded once to target, twice to target. Same anchor new highs now. Very likely though, the market's already holding a new extension long target, extension longs. So actually very, very, very bullish. And you can see off this last extension how we had once to target, twice to target, and then this next traditional is actually the new extension trading. So I'm bullish above 157 in the pound, looking for 157.50s, and ultimately should be like a magnet back to this short and potentially through it if we continue this offer that the dollar has picked up. And finally, let's look at Euro Aussie, because we've been trading both the Euro and the Euro Aussie here is a good indication to me that we potentially might are having our reversal in the Euro. So the Euro Aussie has has hit its downside targets. You see that? To the pip, hit its downside targets. I do see the potential for an extension short at the 1940s. Let's move down to the hourly now. This is what we're gonna want to see Euro Aussie make a turn. It was an extension short, traded once, twice, and is now has new valid extensions. Let's see, traded once, and actually, I think we can get even more aggressive here on these extension shorts and say that we have not traded into the 1789 short. What we did break was we broke a new extension, and the market has pulled back on the hourly and has started to actually hold a full pullback on the Euro Aussie. Not that the Euro needs this to rally, it just would certainly bolster people buying the Euro against the dollar versus buying the Aussie versus the dollar. So potentially we're seeing longs hold off lows. And you know what? On the way down on this Euro Aussie, you did not see that. We saw some there. Certainly was not getting long participation. So seeing the longs participate is refreshing. It's not make or break for our trade though. It would help, without a doubt. All right, everybody. That's about it for today. I'm gonna, we're holding, hold them if you got them, longs. See no reason we don't continue to the upside overnight. If we break longs, and we start short trends from here, there'll be a counter trend short in the Aussies, down into better buys. But at the end of the day, we're in longs until we're not. And we had a great discussion with Cover today about the Euro, and he was saying like, oh, we didn't like seeing this sell-off here, but the sell-off was into a full halfway back long, and we've seen the long, now the long's holding. Inside it's not being technical, but we have two longs with targets, and that's all we have in this market right now. We don't actually have any short anywhere. It's they're all broken. So with that being said, have a great night, everybody, and I'll be back with you as price action develops.